Buyers are losing money because they don't know these things are negotiable. On this episode, we're going to share 7 tips with you to help you save money on your next purchase. Hello, and welcome back to the Happy House Hacking Podcast, the podcast designed to help young people in California navigate the path to happy home ownership. We are your hosts, Owen and Camille Schwagerly, and we are realtors, investors, and happy house hackers. And on today's episode, we're going to be diving into things buyers don't know that they're missing out on and ways that you can save big time when it comes to buying your next home. Okay, so let's dive into this. So first off, when people come to buy a house, they think price. Everything's about the price. I'm getting a good deal if I get a good price. And it's true. That is a component of it. That's not the only component of it. There are many different items that are negotiable that buyers don't know about. So we're going to cover that.
Yeah, so we always say price and terms. And sometimes favorable terms outweigh the price at the end of the day. A seller wants other components to a winning offer, maybe a rent back for a couple days to help them move, or maybe, some help with their closing costs. So anyway, we'll dive into all of those options today. But our goal is that you walk away from this episode knowing, hey, I can still get my offer accepted in a multiple offer situation without having to raise my price all the way. Maybe I'm still helping the seller net more, but a slightly lower price will help save me on property taxes. And that's something that's really important, especially in California.
Totally. Okay, so we're going to start with number 1. Something that most buyers don't realize is negotiable: mortgage rates.
Yes, this one is really important, especially when you're working with someone local. So we've had a lot of clients get pre-approved, quote, on Rocket Mortgage or any of those online loan programs. And what they aren't getting is someone tailoring their mortgage quote to them and their financial needs. They're getting just a blanket pre-approval. They also aren't getting the upfront costs of all of their loan origination fees and other closing costs that they're going to have as part of this loan. Versus someone local, you can go and sit down in their office. You could talk to them on the phone immediately, usually get their cell phone number, and go through all of those items in detail. And once you have a few quotes, you can go back to your favorite lender and say, look, I really want to work with you, but so-and-so over here gave me a better price, better quote. Can you beat that? And oftentimes, a lender can beat it.
Mm-hmm. Yes, you want to look at multiple quotes. If you don't get multiple quotes, you are leaving money on the table. So we recommend you get at least 2, maybe 3 lender quotes where they have the loan estimate, which gives you the total breakdown on all the costs. That will show you what the loan origination fees are. Sometimes they have transaction fees, processing fees, and other things that we call junk fees that they tack in there. And some of those might be able to get waived just if you ask.
Yeah, and some lenders are even offering free refinances right now because rates are so high. And they're saying, well, if rates are expected to go down significantly enough to make a refinance worth it, then within this year of you closing on this loan, we will give you a free refinance with our office if you work with us. And that's a huge reason to work with a lender too, so you can save money again on a refinance.
Absolutely. Because that loan origination fee could be anywhere from 1% to 2%. And if they say, we'll let you refi for free in the next year or 2 or whenever you do that refi, that would be huge cost savings.
Right. Yeah. 1% to 2% of your loan. So if you're getting a loan for, let's say, $800,000, that's between $8,000 and $16,000 savings, which is very significant.
Yeah. So there you go. Right out the gate. Tip number 1, mortgage rates. They are negotiable. They're not as fixed as you would presume.
On the front end, yes.
Yes. So do your homework. Make sure you get your rates by talking to multiple people. Okay. Tip number 2, insurance.
Yeah, homeowners insurance. Oh my gosh, it's crazy in California. It's crazy. and it's always changing. And it's really important to start off by saying that homeowners insurance is not fixed ever. So you're getting your fixed rate mortgage at the closing table. You know that you are buying this house at a 6.5% interest rate for the next 30 years. Now, at the closing table for your homeowner's insurance policy, you just have a quote for 1 year, and maybe it's $2,000 for that year. And next year, it might be $2,500, could be $4,000. There's no cap on how much they can raise your homeowner's insurance fee. So it's really important you know that going into it, because you might need to shop around within a year for a new policy if you end up getting a 100% plus increase in your premium. So we always suggest at least 2 quotes on the front end for homeowners insurance while you're in escrow, especially if you are in an area in that maybe needs flood insurance or some level of fire insurance, earthquake insurance. Those are all really important things. And you'll notice too that the very least amount of coverage most insurance companies suggest is getting coverage for $330 per square foot. So if you're buying a 1,000 square foot house, which is pretty small, it's probably going to be bigger than that. But for easy math, you want that it will be insured for $330 per square foot. And that's not necessarily a lot of money for rebuild. And that's why they call it the exact minimum amount. So you can play with those numbers to change your premium. So if you are buying a home that is maybe updated with very high quality fixtures and furnishings, you're probably going to want to raise that by a couple $100, like probably at least $500 a square foot for coverage, because that's the amount of money you're going to get back from them in order to rebuild your house. So those are really important things. The other numbers that you can play around with include your personal property. So if you're like us who inherits furniture from family members or from free Facebook Marketplace or good friends, then you probably don't need a lot of coverage for your personal property. The value of our furniture in our home is very, very small. So we don't need a homeowner's insurance policy for $100,000 worth of furniture, because we don't even have a fraction of that value in our house. So if you are someone who is maybe more frugal and savvy and doesn't have the highest quality furniture, then you can decrease the amount of coverage for your personal property. So that's something too that will change your premium. And then just keep in mind the next year you are going to get most likely a rate increase. And that's another opportunity for you to shop around to find another homeowner's insurance policy that meets your needs.
Mm-hmm. And that's why we recommend you get multiple quotes on the insurance front. And it could be one guy's saying $300 a month, another $500 a month, and then one's at $225. And you wouldn't have known that if you hadn't shopped. So this is where tip number 2, major savings come from negotiating and looking for really good insurance.
That's right.
Okay, so next on our list is repairs. So home inspection, pest inspection, we always recommend you get those. And then any items that you need to get fixed or repaired, that's a negotiating point. And we've touched on this before on this podcast. So if you've been listening for a while, you know that there's 2 rounds of negotiation. There's round number 1, get the house under contract. Round number 2, let's do our due diligence, and anything new, we can use that information. It's new material, facts. We can use that to renegotiate terms or price.
Yeah, so that's another benefit too, because sometimes sellers would rather just give concessions than do the repairs. So that's a great way where maybe you get a $5,000 concession for your closing costs, and you don't have to wait around with a longer escrow to get those repairs done. And that's cash immediately in your pocket that you can do to put towards those repairs after you close escrow.
Mm-hmm. Yes. And then tip number 4, closing costs are negotiable. And so oftentimes your closing costs can amount to anything from 2 to 5 or even 6% of the purchase price. And that is separate from your down payment. Now, the cool thing is sellers can actually grant concessions and give you money to help go towards your closing costs, but they can't give you down payment money. It just doesn't work like that. They're not letting the seller give you a down payment, but they will let the seller give you closing costs, which is really nice.
Yeah, so you can write that in your offer. When you are writing an offer on your house, you can ask the seller right then and there to give you a closing cost credit of maybe $10,000 because you are really low on funds and you're putting pretty much all your money towards your down payment.
Mm-hmm.
Now, I will say that that doesn't make your offer as strong if you're competing with another buyer who isn't asking for a closing cost credit. So there's, you always want to check the lay of the land before writing an offer to see what type of position you need to be in. But let's say you're not competing and you know you need some help with your closing costs, we can write that in on the front end. And then the other opportunity to get a closing cost credit would be during that second round of negotiations, where there are material facts about the property that change our value. And instead of getting a price reduction or those repairs done, like we just talked about, you get a closing cost credit instead.
Yeah. And one of our clients recently, first time home buyer, they had saved, they'd been working very hard, saving. They had maybe $18,000 or $20,000 saved, and they had this house come up. It was perfect for them and their family. And it was, they were looking at a $500,000 price. But at the $500,000 price, they didn't have enough money for the closing costs. And so what we did, which was creative, and it was a way to help that buyer have the money for closing costs, was we increased their offer price to $515,000, and the sellers credited back $15,000, and then the buyers had enough funds to close. So they had their down payment of 3.5% minimum, which at 500,000 is just about, $18K or so. And then they had what they needed for the closing costs. And so that is a creative way to work it into the deal. So instead of having the buyer bring that extra $15,000 in closing costs to the closing table right now, they were able to wrap it into their loan and then pay that over a 30-year period of time. So they basically financed that $15,000 closing cost credit. And it worked out great. The seller still got their net number of what they wanted, and the buyer got that assistance. And oftentimes buyers don't know that they can have that assistance when it comes to their closing costs. So even if you don't have a large amount saved, talk with your realtor about strategies on how you can maybe work your closing costs into the offer and have the seller help you close the deal.
Yeah, that was a great story. I'm so glad
I know.
they ended up getting a house. That was the American dream. It was so amazing. All right. So, number 5 is fixtures and appliances. So, we have seen many times that there are additional appliances or fixtures beyond your standard stove and refrigerator that a buyer really wants, sometimes even furniture. And depending on the situation of the seller, it might be in the seller's best interest to include that as part of the sale as well, because maybe they're moving out of state and they don't have time or the money to haul their gigantic pool table to their next destination. Or maybe they have a custom piece of furniture that really only fits the unique layout of the living room, and their new house doesn't have the space for that type of setup. So we can ask for anything in an offer. We can always make this part of our offer. And then it's up to the seller to decide if they even want to accept that. They might say, yeah, I really want to keep this special, couch that was in my family for 2 generations. So I'll accept your offer, but I can't sell you that couch. And that's fine. But oftentimes we've seen sellers be very grateful to buyers to just let them leave their furniture because they don't have the space to take it with them. And sometimes that furniture amounts to $10,000, and you don't have to go and furnish your new home because you have the ability to leave that at the house. So anyway, I definitely suggest going through that as a buyer, especially if you're already tight on funds when you're going to buy your house, because the cost of fixtures, appliances, furniture, it adds up fast.
Yeah.
And there's only those really big annual sales once a year that make it maybe a little bit more affordable, but it's still something that we want to make sure you're aware of. You have the ability to ask for any of the personal property in the home, and the seller could say yes or no.
Yeah, I know. And there are family heirlooms or like pieces of art that they're going to say, no, I'm keeping this, of course. But you never know unless you ask. So we've heard of deals before where they threw in, oh, can I have the car in the parking lot? Kind of out there,
Yeah.
a stretch, but hey,
They didn't get it,
you know,
but we tried.
it could happen. Totally could happen. And so things to put in there, like stoves are required to transfer in real estate, especially if there's financing involved. But if you're looking for those other appliances like the dishwasher or the washer dryer, the um, refrigerator, those are also negotiable. You want to just make sure to check the boxes for those if you're going to ask for those to be included in the real estate in the purchase.
Yeah. And the next item we want to talk about are home warranties, because home warranties, I think, are sometimes underutilized and they do really have a benefit. They cover all the systems and appliances in your home and they last about a year. So if you are buying a house and the seller gives you that home warranty, it's usually around a $600 to $800 price that the seller is giving you as part of a gift, in a way, a gift for buying their house. So the home warranties are a great way to just have little fixes done around the house. So let's say, you're a couple months in and there's something weird going on with the electrical. You call your home warranty company out for an $85 service fee, find out that the electrical's covered, and they do $2,000 worth of electrical repairs. And that was huge savings because all you spent was $85 for the call out fee and they took care of the rest. You can even get your house rekeyed after buying the house, as part of the home warranty. They will come and snake your line if there's something, going on with the sewer line. There's quite a bit that goes on, and we'll have a episode dedicated just to home warranties so you can learn more about them. But that's a great way to utilize savings. And when you write your offer, you will always put in if you want a home warranty or not. And if you do, let's start off by asking the seller to pay that fee. I have seen in multiple offer situations a seller counter that out and say, I'm not going to pay for your $600 home warranty. You can do it if you want it. And that's fine. It's only $600, but sometimes to a seller that matters to them. I think it's always best to just ask and let them counter it out. And I'd say maybe 8 out of every 10 transactions, they usually say yes, they will cover a home warranty for you.
Okay. Then lastly, we have number 7, commissions. So commissions are not fixed. They're not set by law or statute. Every broker determines essentially what their fee will be for their services. And when choosing your broker, it's important to think through who's going to be representing me. You want to make sure you choose someone that you trust and will get the job done well. Because there are discount brokers out there who will do a transaction for almost nothing. And, in the absence of value, price is the only differentiator. And so if they're not bringing a ton of value, they usually don't have a very fair fee. It's usually on the lower end of things. So we always recommend that you make sure to interview the agent and get that sense of confidence. This is someone I trust. This is someone I know who will do a good job for me.
Yeah. So when you are writing your offers now, we talked about this a lot, the August 2024 ruling that came out. You have that opportunity in there to ask the seller to cover your broker's fee. And usually, right now, we're still seeing sellers accept the majority of that fee, if not all of that fee. In the event the seller chooses to counter that out, then that's something that you discuss with your buyer agent and you say, hey, this is where we're at. What do we need to do? Well, sometimes we can raise our price in order for them to cover that fee because at the end of the day, it's just a net number for them. So price, won't matter as much. And in that instance, that the loan amount is so small for what that fee cost is, it might end up saving you more money if you raise your price and ask the seller to cover that fee to increase the seller's net number than it would be if you brought that money cash to the table. So that's definitely a conversation to have if a seller counters that out. Again, most sellers are still cooperating with a buyer's agent, and this isn't an issue, but that is just something to keep in mind, that that's where that negotiation takes place. Now, I will say too, like Owen mentioned, some of the agents that charge a very small amount, they do very little work and they're very hard to get a hold of. And we've been in situations with other brokers on the other end that are very challenging to work with, and they aren't getting paid enough because, well, they aren't getting paid a good amount, so they're not motivated, right? And if they had higher standards for themselves and charged what the fee is for their services, then they would probably rise and become better and more focused, rather than, hey, I'm a fly by night realtor, so here's my fly by night fee. So it's really important to make sure that you are interviewing multiple agents too, and that you're getting the value that you deserve in your upcoming purchase or sale.
Definitely.
So at the end of the day, it's really important that you talk with your agent about all the ways that you can save money. And there are so many options, so many options. This is just, the most of the time what we see. This doesn't even encompass all of them. So please talk to your agent about different ways that you can save money. And if you ever have questions, we're always available for you to reach out. Thanks for tuning in.